by His Excellency Ambassador William Pope and Stella as well, who also set the scene. And thank you as well for telling us what we need to do today. Now, the whole situation around the world has changed. It's not just this year. It started, I think, 5 years ago. People have been warning that we have to have sustainable financing. We have to be resilient, and so on. And then this year, it's just come up to a crescendo, to the maximum, we would say, in my part of the world. I want to just paint a picture of the situation that we are in. Of the 20 traditional donor partners that provide aid to Uganda and other developing countries, 16 of them are either reducing their funds, reviewing the way that they do business, or just not providing as much resources as they used to do in the humanitarian sector, in the development sector. They are shifting and saying, we want to trade with you. We want our partnership to be much more equal, to be more equal. We want to make the deals. We don't want to keep on giving handouts. It made me think, myself and other resident coordinators and my team, the economists, that where should we look for deals? Where should we look for partnerships? And it occurred to us at the United Nations that each country has to have skin in the game. We have to look to ourselves first before we look to others. Why do we say this? I've got some numbers for you. Private savings, the money in the bank, the money in Stanbic Bank, Standard Chartered Bank, Equity Bank, and so on. Across Africa, there is 427 billion US dollars in savings. That's a lot. So what does that say? Domestic resource mobilization. It talks about us Africans working for ourselves, using our own resources, before we look to the other capitals of the world, either in the West or in the East. We have Africans working in the diaspora, and they send money to Africa every year, and this money is 100 billion US dollars. It comes through wire transfers. It comes through the banks. It comes through Stanbic Bank. We work every day as civil servants, as entrepreneurs in the private sector, as chief executives in the private sector, as clerks, as managers, and we save. Every month, a bit of our money is taken and put into pension funds. And how much is that? That's 700 billion US dollars in Africa. And we can use this money, just these three pots of money, investable capital that can be utilized. So yes, they are shifting global priorities, but this just demands that we are much more innovative, that we're agile with the funding, with financing. Think out of the box about how we can actually fund our own development. There's what we call South-South cooperation in the United Nations. That is a South African bank investing in another African country. A Standard Bank, Stanbic Bank, is a South African giant. It's in the south, and it's invested in Uganda. It's investing in many countries across the world. Well, it's very expensive for African countries, for African business to borrow money on the international market. Other companies around the world will borrow at 1%, 2%. Our companies, our businesses, our SMEs borrow at around 10%, 12%, 13%, and above. So why? It's because there's a perceived risk. The risk is high. That's why the people that do the accountants, when they're accounting, they say that, well, we will lend you the money, but at 12%. So how can we deal with this issue? We have to be practical. We are not going to change the world and tell them to lend companies at 2%. But we can use what we call blended financing, de-risking, where I can say as a government, for example, the US government or other traditional donors, they can say that, well, we will put some money up front, or we will bear the first loss in this enterprise that you are thinking of starting, a startup. We will use our venture capital to help you start your business. And let's go together to a bank and help you get concessional lending, reduce that interest rate. We can also work together as African countries to basically change our credit rating. Our credit rating is not good. That's part of the reason why we are borrowing money expensively. So I think there is an opportunity. Reduce risks to attract private capital. We can also use new pots of money. There's a lot of money available in climate financing. So what does this mean? It means we have to integrate capital. This is now jargon. Let me now break it down a bit. What I'm basically saying is we can do partnerships. SDG 17 is about partnerships. And I'm thinking that we can take taxpayers' money that comes in the form of grants, that sometimes comes in the form of concessional loans, and blend it with private capital. The 2-point-something billion that's sitting and waiting to work in Stanbic. Can we have public-private sector partnerships? So joined up initiatives, joined up thinking, using the innovation, the entrepreneurship, skill, the zest that the private sector has with the bureaucratic meticulousness of the United Nations, the thought leadership that we bring, the ideas that we would have gathered from the 4th International Conference on Financing for Development that was held in Seville this year in July, that has made commitments to mobilize domestic capital. We can also think about some of the ideas that have come out from other international conferences, such as the one that we had in August in Awaza, Turkmenistan, where we were talking about how landlocked developing countries can basically become land-linked. So partnership will redefine a global development agenda, our global development finance. But we have to be resilient. We have to build on what we have. Not only should we use local capital markets, but we should always think that we have to get out of the aid business to the trade business. I think it's a very, very amazing proposition that is offered us. Whatever the geopolitical changes, let's not see the dark cloud. Let's see the silver lining. Because therein, there is opportunity. Let's think about the woman in Uganda who's looking after 5 children and would like to start a business. Let's help her to be resilient. So, how can we do this? How can we help a small business or a medium-sized business? Well, why can't they use the capital market? Why can't they come to talk to a bank and say that, well, I have a good idea? Why can't they use what we call in Uganda the parish development model? That is designed to leave no one behind, that is designed to bring everybody into the money economy. That's what the National Development Plan 4 of Uganda from 2025 to 2030 is proposing. It's proposing a 10% growth. It's proposing to move, to grow the economy from a baseline of 50 billion to the ambitious target of 500 billion by 2040. But that's big business, oil, gas, everything, agro-industrialization, tourism, minerals extraction, science and development. How about ensuring that we leave no one behind? How about ensuring that everybody is able to have at least cows, some chickens for eggs, cows for the milk, so they can sell to these factories that are emerging in Uganda, the dairy factories that are producing skimmed milk and exporting to Algeria. It's happening in this country. Many of our donor partners are also the largest investor in this country. We heard about the investment the United States has made over the last 60 years. I heard recently that the number 1 foreign direct investor in Uganda is the Netherlands. And they are really based in agro-industrialization. So let's use that. We can also use the bond market, thematic bonds, sustainability bonds. Stella spoke about all of those things that we can do together as development actors. Why don't we monetize that? Climate finance equals to green bonds. Think about that. How much money would the banks make in profit? Also, we can use some of our challenges. We are very indebted on the African continent. The debt here in Uganda is sustainable, but the interest rates are high. We pay a lot, but can we use that for development? Debt for development swaps. I owe you 10 billion, I owe you 10 million, I must say. So the creditor then says, well, why don't you invest 10 million in the education sector to improve human capital development? And you don't have to pay that. So instead of giving 10 million in aid, you actually say that 10 million that you owe me, use it to build schools, use it to build clinics, show me through a very transparent and accountable pathway that you've used that money for what I would have used if I gave you the aid, and I will forgive the aid, the debt. That's quite interesting. Think about that. So, what have we been doing? I see this as a building block, and I'm very happy that private sector is doing exactly what we've been imagining since the beginning of the year. we thought about talking about financing for development. So we had a climate finance policy dialogue within what we're, the series we're calling Policy Dialogue Series for Financing for Development in Uganda. The first one was on climate finance. The second one was on domestic resource mobilization, including public revenue mobilization. And the third one was exactly what we're here for, private capital mobilization. Because the game changer is not taxpayers' money. The game changer is investment, private capital investment, shareholders, people buying a stake in the future of Uganda. So we discussed this. It was very successful. There was also another summit that was held. And then there's this one. So we are thinking, and we are saying, let's have a national consultations. And yesterday, we were very fortunate to meet the president. The United Nations country team met the president and had very good discussion. And we proposed to government that let's have national consultations on financing for development this year, maybe next year, to talk about how we are going in this terrain today, how we are going to finance Uganda's development. The Prime Minister has agreed to have the thematic discussion on financing for development. So, under the National Partnership Forum, which is a big meeting that brings government and development actors together once or twice a year, we are going to have one agenda item, the same one that we are discussing today, financing for development. And we hope it will be a success. And then, on the back of that, thinking about private capital, is we would like to have a Uganda Investment Forum, where we will bring all partners together with government, trade delegations. You know, usually we go, Uganda goes abroad to Japan. Recently it was in Japan that the delegation went, TICAD. So we are saying, why can't we bring them here so that they can experience the pearl of Africa, they can taste matoke, they can hear the sounds of Kampala, the border, and they can imagine how they will invest in climate resilience, climate adaptation, and they can go to see the source of the Nile in Jinja. So they can understand us. And maybe, just maybe, capital interest rates will be more positive for us. We'll be able to mobilize more money, and we'll be able to deliver on the tenfold growth. I would also like to say that, you know, there are so many Ugandans abroad in the diaspora. We need to make Uganda more attractive to bring that money to Uganda. After all, they got their education in Uganda. Yeah, their ancestors are buried in Uganda, and they should invest in Uganda. Uganda is home. And then, of course, we should try to bring as many people as possible who can make Uganda great to Uganda. They say that there are many reforms in the United Nations. We call it UN at 80 initiative. And people just think of the downside. Here in Uganda, what has happened is the United Nations resources reduced by 162 million US dollars this year. We are saying kwaheri, goodbye to 400 of our international and national colleagues. But there's also an opportunity in UN at 80 initiative that is relocating services from more expensive locations like New York and Geneva to Uganda, using the human capital of Uganda, using the skills that Uganda has, because we have what we call here the Regional Service Center at Entebbe. When you're going to the airport on the right, you will see a UN facility, and that does a lot of back office work. Processing salaries, that was mentioned, processing travel, processing entitlements for UN staff. So who do you need for that? Accountants, finance people, administrators, skills that are readily available here in Uganda inexpensively. I am told that that might create 500 jobs. So there is an opportunity there that we shouldn't miss. I think that's it. I'll be repeating myself. The other notes I have here have been really outlined by the other speakers. The game in town, the game changer, is domestic resource mobilization. Let's use our own resources to develop our countries on the continent. Let's use the partnerships, not through aid all the time, that we've built over years with our traditional partners. Let's take advantage of the hand that they are offering to trade with us. And let us ask for terms of trade that are fair for us, those that grow our economy. So that is what I'm thinking. Let's integrate our ideas. Let's embrace the change that is happening. Let's not be downcast. Let's look forward. Let's look west. Let's look east. But always Africa, always Uganda. Let's look forward. I've paraphrased Kwame Nkrumah, who said, we neither look west nor east, we look forward. Thank you very much.